Welcome to our today's feature presentation, Day Trade Where Prices Move. As the title says, this presentation is geared towards the day trader, and we want to show you intraday opportunities, how to capture them, and how to not trade when the market does not allow. That's very important too. My name is Thomas Barman. I'm your presenter today. I want to make you aware of the disclaimer here. And now let's dive into charts and see where prices move. What you see here is a 30-minute ES chart, so the E-mini S&P 500 index futures. And you see on our charts that we frame uptrends in blue, and also color the candles for uptrends in blue and for downtrends in red. And then we also have these boxes here on the chart where we see when those price containment areas get surpassed, then there is a certain directional way of where we see a price expansion. And we'll also formulate that with our price thresholds that you see at the individual instances. And we only trade when the next candle ticks that out. Here, so for example, 2,385, and that's 80, that should be 75, but it's rounded up by our system. So therefore, if the next candle is at 2,386, which happened here, we had a lot of time getting in that, it's a 30-minute chart, then we would accept the trade. And then there's specific rules to how far we trade with the individual signals in red, blue, and orange. That's the Never Lost Trading top line chart. In addition, on the chart, you see some zones which we call purple zone. So they're highlighted here, here, and here. And what they tell you is those are zones of ambiguity. So when the price is entering one of those and the purple cloud starts coming on the chart, then directional price moves are critical to be found because the market has to find the direction first. And after the zone ends, then most likely we get a bigger price move either to the upside or to the downside. But what is it going to give you? It gives you an idea when potentially not to trade, not to risk your money because direction is not clear. And you saw how all over the place the price moves were, even though there were some signals, none of them was confirmed because the next candle didn't tick lower. And so then you know immediately for a basically full day, don't invest your money because you don't know the direction where it's going. While here, relatively clear, and I explain all the details, how you can get in and out of positions and predefine at entry how far a price move will last. With all our systems, we are trading as mechanical as possible. So that means clear-cut entry, exit rules. Let me spell them out with you for the individual chart setups or signals that you find on a chart. On blue signals, you want to trade for a maximum of 5 bars in one direction or a maximum of 2 speed units. The speed unit gives you an idea how far the price move shall reach, and here measured on the last bar on the chart, there was an expected price move of 3.5 S&P points. Yeah, and so that's your expected price move. Bar by bar, you will get an idea, but also we put the expected move here on the chart, and you see how precisely those two things corresponded with each other. Yeah, so 1, 2, 3, 4, 5. And also there's the out, and then the price starts faltering and then reversing, and when it does we get another signal. And orange signals we want to trade up to 10 bars or again 2 spoos, 2 speed units at entry, so then we know our out. And here you see precisely we were good in doing that, and there you have a duplicity. 2 different signals come together at 1 bar, so then we see another constellation we trade for, we call it tower to tower. The candles with a cyan dot in the middle, that's our light tower candle. A light tower stands tall and points a direction, so that was happening, and a price move that starts in a light tower often ends in a light tower. So a second light tower comes up, tighten the seat belt, because there we need to be landing and taking profits, and that was wise to do so. Yeah, so those are really simple, clear-cut rules that you can orient yourself at trade entry and that you know where to put your exit. By our trade rules, we always only trade when the signal candle high or low is ticked out. So how is the difference between high and low? So here you have a long opportunity, then the high has to be ticked out. When that's happening, we go long. Here the low has to be ticked out, and on the orange signal we assume a little bit of a reversal, so that would be a better shortage point. Therefore, you see a difference here between 3 points, because here we say, okay, when that happens, most likely the price comes back here and gives us a better entry only on those orange signals. On the chart, you see the 30-minute ES. And so let us dive into the details, and I highlight the first session with you here. Yeah, so here market gapped up, but gave us a clear opportunity in 9:30. So why do we do that? Around the clock, we don't usually trade the 30-minute time frame, but on a day session, it's a good time frame to trade. And so then we got in here at 8386, yeah, so at 86 we got in, and our out was basically in that candle at 96, yeah. So this was a nice 10-point move we were able to capture within following our clear-cut rules and regulations. And as you know, a 10-point move is a $500 per contract income for you when you trade the ES. Quickly after the up move, we have our down move pattern here. So again, the low has to be ticked out, which was, we assume a retracement for a better buy. So if you got in at 2399 and you go for 10 bars, that's about what we trade for. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So that would be our out potentially. Yeah. So, and when we look here together, what does it mean getting out here at that candle? So we would have captured the difference between 83, yeah, and 99. So that is a nice 16-point move realized here on EES right after we captured the 10-point move. And then we see prices halting for a certain period over here, and then the duplicity. You get two signals coming at once, but tower to tower. And so here our trade would have lasted basically for the difference between 2377, yeah, and 81. So that would be a 4-point move. And then afterwards, that's important. That's important. So let us look at what came after. Highlighting here the most recent happening here, so that is March 8 and 9. Then you have all this ambiguity. So you see signals are now confirmed, and it was not worthwhile to put your money on the ES because the institutions had no mapped out direction. Yeah, and when they did it in a volatile way and manner. And this is not when you want to spend your money and you want to trade the markets when direction is not clear. So you see, with us, you always have a good idea when there is a clear-cut scenery of opportunity that you can realize and for how far it holds, and when it's better for you to stay out of the market. Yeah, that's the big difference. Trading to working and trading. Trading is a weight game. Working is an action game. Yeah, so here you take action only and only when the markets move, and it's not worthwhile to invest your money when that is not the fact. While when it's worthwhile to invest your money, as you see it here or saw it prior, then big moves can be captured by following clear-cut rules and regulations, which we teach you one-on-one in our mentorships. To learn all this, we work with you one-on-one in our mentorship and coaching programs. Yeah, so we'll focus on your best available time, also include weekends. We install all the software for you. You have nothing to do with that. You will receive free real-time data through our provider, which is very important. Yeah, and then you always trade with defined entries, exits, and stops for a defined time period, and we help you to position size and know the time in the trade when you best exit. You saw the rules like 5 and 10, which I showed you prior on the chart. And we help you to build a business plan, a financial plan, and an action plan so that you know what to expect from trading and how to act at certain situations in the trade, during the trade, and in trade preparation. We are in the trading education business since 2008. And we want to help you to turn yourself into the trader that you want to be. And with that, we are providing systems and education and strategies and a lot more that you can all find on our webpage. But when you're sure after this presentation that that is for you, then call us 866-455-4520 or contact at neverlosttrading.com, and we are happy to set up our personal consulting session with you where you can see how the system works live and in your favor. We're looking forward to hearing back from you. Thank you very much for your attention. Bye-bye.